Welcome to the Inside Out Money Podcast.
Can't even recognize this place. Too many pieces of our past mistakes.
Hi, I'm Maggie, and I believe real change starts from the inside out. So let's work together to improve our money and our lives from the inside out. We will explore all things money and our relationship with it. Join me each week with a rotating set of co-hosts, friends, and interviews. Let's jump in.
It's time, we going round and round and round and round and round.
Okay, I'm ready. You ready?
I'm ready. Are you ready?
Oh, I'm ready. I was born ready to talk about high yield savings accounts.
I was literally birthed with a Wealthfront referral code in my hand.
Yeah, I mean, I had a percentage point on my forehead when I came out of the womb.
Maggie is
birthmark.
just short for Magnificent Health High Yield Savings Account.
My real initials are APR, but I changed my name because that sounded weird.
APY?
Somebody.
Or APR?
What'd you say? APR. Oh, APY would make more sense. I don't know what APR is.
I think that's like when you're paying it.
Oh, rate. Annual percentage rate. Yeah.
Anyways.
Yeah. None of those are my initials anyways. Okay, hi.
Hi, Maggie. How are you?
I'm doing awesome. I'm excited to talk about high yield savings accounts today.
That's great. You look really, I know this is an audio podcast, but you look like so pretty and summery today. Like, I feel like you got a little pink in your cheeks and you look tan.
Thanks.
And
Oh,
yeah,
thanks. You look very summery too. I feel like right when we both got on, like I'm not even wearing a shirt. I'm just wearing a sports bra.
Oh, amazing.
But I feel like it's summertime. But it could be a shirt, you know?
I definitely thought it was a shirt. I'm wearing a shirt, to be clear.
Oh, it's more of a shirt than my kids wear. I mean, you can call it a shirt.
It's like a very cropped shirt. Yeah.
Yeah. It's a very conservative sports bra.
Do you want me to take, this is about to get like a different rating, but I was like, do you want me to take off my shirt and then we'll be just.
Yeah. What are you wearing under that?
Just like a sports. We're both wearing workout clothes, to be clear, is all we're saying. We're not trying to veer into.
All I'm saying is, though, I keep my house kind of hot. And my rule is like, well, when you get hot, you don't turn the air down. You take some clothes off.
Just take off your
Everyone
shirt.
in my house. Yeah. Yep. You can't be walking around in like flannel pajamas complaining about the temperature, which is what my teenagers do.
That's legit.
Okay. This is all, I'm going to like tie this into high yield savings accounts at some point. Like, it gets hot talking about high yield savings accounts, especially the high rates.
Yeah.
So we're going to talk about everything you ever wanted to know about high yield savings accounts. And it's funny, when we first talked about this, I was like, oh, is this a whole episode? And this feels like a simple, basic topic in many ways, but I am always fascinated by how many people I talk to that don't use high yield savings accounts and that keep small to very large sums of money just sitting in like their Bank of America accounts. Mm-hmm. Or an account that is earning like, 0.0x percentage, a tiny amount, a negligible amount. And I'm just, and then when I explain it to people, I sort of always get a mix of like, they don't believe me. They think there's a catch. Mm-hmm. They're like, wait, you can access the money whenever you want. Like, how is it that high? So we're going to get into all of that today.
Yeah. Like, does it expire? Is it real? Do you have to collect points or something complicated?
Yeah. They think it's like a CD. They're like, money's locked in and they can't access it for a while. And I'm like, no, it's super simple. It's just like really easy. The level of skepticism from many people of all walks of life is always like a little surprising to me.
I get it. I can see some things do seem too good to be true. I feel the same way. Okay, I think high yield savings accounts might be your favorite account, but HSAs, which are
I was just going to say
health savings
feel the same way about HSAs,
are my favorite.
Yeah.
And I do kind of think they both seem almost too good to be true.
Yeah.
Maggie, what is a high yield savings account? When you say that, what are you talking about?
So it is just a savings account. They offer a higher yield, which I think is how they got that name of high yield savings account. They tend to be offered by online banks. And because they are online banks, they're able to, which we'll get into why, but they're able to offer a significantly higher APY, also known as my initials, annual percentage yield, which is the interest rate, right? So they're able to offer a significantly higher interest rate compared to traditional banks, like a brick and mortar bank that has a savings account. And that's why they're called high yield savings accounts, because they offer a very high annual percentage yield.
Okay, that makes sense. So instead of earning like a quarter on your savings account every month, you can earn more money.
Yeah, totally. But it's just like a regular bank account. I mean, back to my point about skepticism, like they're still insured by the FDIC, which is the Federal Deposit Insurance Corporation, or if it's a credit union, there's a different organization called the National Credit Union Administration that insures them. And so the level, they insure your deposits, and many of them are actually insured at a higher rate than a traditional like brick and mortar bank.
Right. And when you say
insures things
insured,
at.
like if the bank went out of business, this insurance company would like make sure you still got your money. You know, when you go in the bank
Yeah.
and you see that little sign that says like your deposits are insured up to $250,000.
It's like a little gold plaque on the wall.
Mhm.
Yeah, you probably walk by it and don't even notice it. Yeah, like if something went belly up about your bank or there was like a corruption, anything, banks have gone under. Big banks, little banks, medium banks, they've gone under. Yes, your deposits are insured up to $250,000, but then some online banks insure them into the millions because they kind of, quadruple plus that insurance.
Yep.
But the point is, like, it is just a savings account. It just offers a higher yield.
Okay.
And so it's the kind you want. I don't think anyone's come up with an acronym for like low yield savings accounts. They're not like, oh, have you opened up your LYSA?
No, thank you.
That's exciting.
That's not quite as enticing.
Yeah.
I think it's helpful when talking about high yield savings accounts because, listen, it doesn't sound that exciting. It sounds like kind of a snooze. Like, oh, a high yield savings account. Fiscal responsibility, to refer back to remember the shoes meme from the early 2000s? Like, let's get some shoes. That lady.
No, I have no idea.
It was like a viral. It was one of the first. I think it was like one of the first viral videos. And then at one point, in the video, the lady's dad goes, "Fiscal responsibility." Anyways, high yield savings accounts don't sound that exciting.
Sounds funny.
But does $500 sound exciting to you? Like $500 that you would get for free?
Yeah, that I didn't do anything to work with, and there's no low risk on for sure.
Right. So just as an example, full disclosure, Maggie and I both use Wealthfront. I'm just saying it.
Wealthfront. Yeah, people. It's the word wealth, and my braces don't help. The word wealth and then front, so it's WEALTHFRONT. Wealthfront.
As a joke in our house, we call it Woof Front because that's what it sounds like.
That's funny.
You're like, oh, did you check
That
the
would be like a
Wolf Front
dog.
account? Like a dog.
I like it.
Anyways, we both use Wealthfront. And just as an example, so Wealthfront right now is paying 5% interest if you use someone else's referral code. And this sounds like you're getting an infomercial, but
Every time I mention the referral code to someone, I'm like, oh, it sounds scammy. Because I'm like, I've convinced them that a high yield savings account. And then I'm like, you should use someone's referral code. I don't even care if it's mine.
Yeah.
Just use somebody's. Like, because you want the extra 0.5% that Wealthfront offers for 3 months when you come through a referral.
Right. So Wealthfront right now, if you use someone's referral code, and we'll post ours, but you don't have to use ours. Just like find someone will have them for you. I actually had a post at one point. I'll repin it on my profile on Instagram where other people could be like, I also have a Wealthfront account because your referral code can only be used so many times before it like maxes
You
out.
can only like get it pushed out for like a year and
Yeah,
then it
exactly.
maxes. So you really only like need like 4 referrals, then you're good for a year.
Yeah.
So yeah, we'll put when this show airs, we'll both put some links up on Instagram where we ask for other people's Wealthfront referral codes.
Yep.
So go open an account and then DM us your referral code.
And we'll share
Or better yet, we don't even have to post it yet. Proactively DM us your referral code and we'll share it.
Exactly. So to finish the thought that I started like 10 minutes. Sorry.
Show us the numbers.
I got so
What's the
distracted.
show me the money?
So
I don't know that shoe meme, but I do know the show me the money. Show me the money of how much I can earn
Exactly.
through a high yield savings account.
So Wealthfront, if you use a referral code, it's 5.5% interest. If you don't, it's 5% interest. That means if you had $10,000 in your savings account, you would earn $550 a year in interest if you were using
Per year.
Wealthfront. Even if you didn't use a referral code, you'd still get $500 per year in your savings account just from interest. Like you just stick your money there like you would in any savings account, and every month they're going to pay you a little bit of interest, and it would add up to more than $500 per year, which is cool. On the other end of the spectrum, if you use a Chase savings account, they're paying 0.02%. And so after 1 year of letting your $10,000 sit there, guess how many dollars you would have too?
$2.
Thanks for holding up 2 fingers.
That's why I got plenty of, I mean, the fact that I could fit the number on my hand is concerning. $2. Bank of America is at that exact same rate. So $2 if you keep your money in Bank of America, which is very popular in the South. And yeah, and so there's a ton of banks in between that, right? If you have Liz, you did a great job of if you have your money in a Charles Schwab savings account, you're going to get $48 on that $10,000. Capital One, $425. That's where you start to get into the high yield. But I love Wealthfront because to me, they're fantastic customer service. They've been really quick to, when the Fed increases the interest rate, they increase their rate really quickly. So they're just competitive. They've got fantastic customer service. I like them. I trust them. They got a great app, and their rate is competitive, and that's what I care about.
Mm-hmm. If you already have a high yield savings account and you like it, like if you're with Marcus or Synchrony or Capital One or
Ally.
Ally's smaller than all of the other ones. Ally used to be the highest, and they have not been recently. I don't know why, but in any case, I don't think it's worth switching. Like if you're getting 4.5% at your bank and you're like, oh, Wealthfront is 5%. I don't know if it's worth switching because it's a lot of work to switch over all your.
My only caveat on that would be it depends how much money you've got sitting in the bank.
Yeah.
So you gave it $10,000, which most people's emergency fund should be at least $10,000. And if you have no idea what your emergency fund should be, I'd say I don't know, the average middle class.
For a family. Yeah.
Yes. Yeah.
If you're a single person, it might be lower than that. But.
Yeah. So yeah, if you're a single person, that could be high. But my point is we did a really good episode on emergency funds. And so go listen to that because Liz, you had a great formula for how to come up with what your specific emergency fund should be to give you some guidance. But my point is if you have an emergency fund, which many people's would be higher than $10,000, or maybe you're saving for a house. And so you might have $50,000 or $100,000 in the bank, that switch from the low 4s to 5.5, that's a meaningful amount of money over the course of a year. And so the only caveat I'd say on that is look at how much money you have and decide, if it's $50 that you're switching for, it may not be worth it, but it may end up being $1,000 and then it is worth it.
Yeah, that's true. But don't get fooled. So I was looking around at different bank rates today, and I was looking at Charles Schwab, and theirs is 0.48%. And so don't get confused and be like, oh, 0.48%. That's pretty good. That's in the fours, what they were talking about. No, it should be 4%.
Yes.
Right? Because the Charles Schwab account only pays $48 a year on $10,000 deposited. You want hundreds of dollars.
Yeah. Agreed.
Anyways, the reason too, I thought I wanted to make sure that we talked about, to your point about people just think that this is too good to be true. We are in a period of higher interest rates because the Federal Reserve sets, what is it called? The federal borrowing rate. And it hasn't been this high since before 2008. So if you're thinking these two are trying to sell me a bill of goods, if this was real, wouldn't everybody know about it? This is too good to be true. It's only recently in the last few years gotten this high again. I think even 5 years ago, it was the high yield account. Even Wealthfront was paying 0.35. So less than 1%, because as Maggie mentioned, Wealthfront and all of the banks adjust based on what the federal, what is it called? Federal borrowing rate? Can you look it up?
Yeah. The federal funds rate?
Yes. That's the cost for banks to borrow money. So the interest rates on savings accounts, interest rates on mortgage loans, all of that is always going to go up and down with that rate. So that's why if it feels recently you feel people are talking about high yield savings accounts a lot more, it's because they're paying more interest than they used to.
Yeah, totally. And on that note, I also think it's helpful to actually explain to people why these quote online digital banks like Wealthfront, Marcus, Synchrony, even Amex to some extent, but I wouldn't consider them completely this, why they can afford to offer such a high rate, because I think a lot of people are curious / skeptical, right? Somewhere on that range. And at a very high level, it's just worth understanding the business model. So ultimately the business model of, I'm going to take a Wealthfront, but I'm using them as an example of a online digital bank. They do not have a physical presence. They don't have branches. They don't have, I picture Bank of America. Bank of America's got big buildings in every, skyline I've seen in big cities. And they've got, retail banks and ATMs all over the place. Wealthfront does not have any of that, right? It is all online, all digital. They have fantastic apps and websites, great customer service, but it's all via phone and online.
Online banks don't have to pay for those little plaques on the wall that says, we are FDIC insured.
The little they just put it on their website.
Yeah.
Yes, there's no brass plaques. That's exactly how they save money. But seriously, they have lower lower overhead costs, right? So they have like minimal physical infrastructure, like I was just saying.
They don't have to pay for like pens that I always steal when I go to my local bank, or there's a little bowl.
Aren't they like tied down with a chain?
Not anymore.
Oh.
I feel like that was, well, maybe I use a local credit union too, just to have like a back.
You cut the chain.
I didn't cut the chain, but they do have really nice pens. And whenever I have to use one, I'm like, sometimes I ask, like, can I just take this? And they always say yes. And sometimes I just take it. And they have a little bowl of lollipops, and I always take a lollipop too.
Yeah. Yeah. They don't, Wealthfront doesn't have lollipop. Maybe a digital, they should come out with like a digital lollipop.
Oh my gosh, we are so smart.
sounds
They should
weird.
hire us.
Woof Front should come out with a digital lollipop. They're like, you guys are ruining our brand.
We sound like we're high. We're like,
I know,
we
I was
should
just
rename
thinking
it.
that.
Woof
And then I was
Front.
like picturing people like licking their screen. Like I was like, what would people do with a digital lollipop? Okay, let's move on. Also,
guys, it's gonna be so great. No,
I know.
I had this great idea.
This is great. Yeah. And we'll send you our referral code. Okay. So they have digital customer service, right? So they have more resources available to offer competitive interest rates because they don't have as large of a, just again, like infrastructure and staffing on hand. They are actively seeking deposits to grow their business model because that's what they do. There's fewer regulatory constraints on digital banks versus traditional banks. And so it's just that
Really?
combination. Yeah.
What's like the difference?
Look, no, couldn't tell you. Don't ask. I read that there are different regulatory constraints on an online bank than someone who, I mean, I'm sure it's stuff about like that you got to put up that, I'm not even joking that you got to put up that brass FDIC sign. in
That
the
makes
lobby.
sense.
You got to have like security guard. I don't know. There's probably all sorts of things.
You don't have to have a security guard and stuff because there's no.
Hold on. Let me.
I love this for us. This is like, we used to have this running joke when I was in college. It was like when someone was really impaired, they would go, hey, no, listen. Hey, no, listen. And then we start singing a song like, hey, no, listen. No, hey, no, listen. Like, hey, no, listen. The regulatory. Totally different.
Hold on. I actually wanted to answer your question. I tried to ask AI. I didn't really get a good answer.
Well, you can cut all of that.
Hey, no, listen. They're just better. There's less.
No, listen.
AI
it's
is
just so good. Just do it. Just open a
Yeah,
high-yield savings
listen.
account.
Woof, digital lollipop. It's gonna be big.
It's gonna
Okay.
be huge.
So I thought I knew this too. I think this is another thing where it's like, this is the purpose of, this podcast is to, I'm not sure what the purpose is really, but let's pretend it's to like learn things about money.
I think it's mostly for you and me to like hang out and have great business ideas we're never going to action on.
Right, exactly. So I think it's also good for us to explain how banks actually make money.
Oh yeah, this is
Because-
good stuff. Listen up.
Yeah,
Hey, no,
this is
listen.
good. Yeah, hey,
This is important.
listen, this is important. Okay, listen, do you want to explain it or do you want me to explain
do it.
Okay, so when you put money into a bank account, like let's take that $10,000 example. Why are you laughing at me?
Now, okay, definitely cut this part out. I feel like everything we say now just sounds like two bros who are like, hi. Okay, listen, put your money
Listen.
in the bank.
Yeah, this is gonna blow your mind. Okay, so when you deposit money into a bank account, let's use that $10,000 example we were working from. So you deposit $10,000 into Wealthfront or Bank of America or anyone, it doesn't matter. That bank essentially is borrowing some of that money from you. Like you see that you have a $10,000 balance, but they're just using your $10,000 to lend out to other customers. It could be loans that they're lending out, like auto, mortgage, personal loans. It could be like commercial loans. There's all sorts of, complex financial products out there, but they're essentially loaning your money out to someone else. And the interest rate that they charge on those loans that they're charging to someone else is going to be higher than the interest rate that they pay you. And so they're making money on the margin between those two things. That is a big way that banks earn money. And this is all regulated. This is FDIC insured, like we just talked about. And so there are rules and regulations.
Yeah, I think that they can only loan out like up to 90% of their deposits. Is that right?
I don't know the percentage. I just know there are rules and regulations.
Yeah, they
that
can only
have been
take on
adjusted
so
over
much
the years.
risk. Like it's
Yeah.
obviously
Yeah.
it's a very regulated industry.
Yeah.
So your money
and
is safe. Like, even though they're loaning out your money, it's not like you're going to go to the bank and go, oh, sorry, we don't have it. Liz, we don't have your money. We loaned it to Maggie for her car loan. That's not.
Yeah. Well, but that is what happened to some banks. Like, was it last year, or like a couple years ago, where there was a run on people withdrawing their money suddenly, and they didn't actually have the money to give people, right? Again, that's where the FDIC gets involved, right? And you know, you're still taken care of. But the reason that these online banks keep upping their rates are because, like Liz was talking about earlier, the Fed keeps increasing, the Federal Reserve, aka the Fed, keeps increasing interest rates, right? So if a home loan, the average home loan right now is running like 6 to 8%, they can afford to pay me 5.5%, right? Because they're still making money on that differential and on the margin between that. Now, think about your traditional bank where we were talking about like Chase or Bank of America that's only paying 0.02%. If you keep money with them, they're making a ton of money off you, right? So you are essentially lending your bank that money for almost for free versus at least at Wealthfront, I'm getting what I would consider a, you know, very aggressive interest rate where, you know, they're taking a much smaller margin on that money because again, they have much lower overhead costs and they're able to run a much leaner, more efficient business than like a Bank of America or Chase or somebody else. And so, you know, they're never going to pay you, like Wealthfront's never going to pay me more interest than what the going rates are for loans. And so, you know, you have, I just think it's helpful to like understand that model and understand that that is how one of many ways that banks make money and how a bank like Wealthfront can afford to pay 5.5% interest as an example.
Yeah, that makes perfect sense. And right, it's just a completely different business model. Like some models rely on larger margins. Some business models have very low margins. So these online banks have lower margins the same way. Like grocery stores have low margins, but they still manage to make a lot of money.
Yeah. Yeah, exactly. Okay. So do you want to just like recap why we think high yield like everybody should have their money in a high yield savings account?
Hey, listen, if you don't have a high yield savings account, pause this podcast, go open one because it's literally free money. Again, I feel like every time we talk about it, we sound like an infomercial, but I'm like, it's actually just free money. So I don't know why you wouldn't do this.
I do a little bit of online coaching, not a lot, but like with a few smattering of clients here and there. And I was doing it for someone that is in my neighborhood and that I see on a semi-regular basis. And we had done like a detailed amount of coaching and I knew how much money this person had that was sitting in a savings account because they may use it for something in the future. And I like saw them and they were like, oh, I know I still haven't opened that account. And I was like, dude, and I just did the math because I was like, that was $1,000 since we last talked. Like that's a lot of money you're sitting on that's not sitting. And I was just doing some like rough math in my head, but I was like, please go do it tomorrow. And then they did go do it. Like within a couple of days, I saw them again and they were like, I did it. And I just think that it's like, that is real money and there's a big opportunity cost to not doing it. So, I mean, you're like half joking, but serious when we say like, stop this podcast, go click on the show notes or go find someone else who has a Wealthfront referral link or whatever bank you feel comfortable doing it with. And it doesn't take a long time. It literally takes like 5 minutes to open an account.
Right. Or again, if you're feeling some lack of velocity, I guess, maybe even see if an institution that you already use. So American Express offers high yield savings accounts, not quite as high in interest as Wealthfront, but it's in the 4s. And if you already have an American Express credit card, it might be easier for you just from a mental load perspective to log into your existing Amex account and say, oh yeah, I'll open that account. Capital One, same thing. I think Discover. So a lot of credit card companies are offering these kinds of accounts too. Something to think about. I mean, we love Wolffront because it's the best, but Wolffront.
They have digital lollipops. We love them. They're great. So, they're FDIC insured.
They actually, like, their website is very satisfying. It's like purple and it's really nice.
I like it. Yeah.
It's like really pretty.
I'm a big fan of their brand color. This podcast is not sponsored by Wealthfront.
Not at all. We just talk about things we like for free, like suckers.
Okay, what else is great about high yield savings?
Well, it is FDIC insured. There is no little gold plaque, but I'm sure there's a digital gold plaque somewhere on their website. So you don't have to, like, your money is safe just the same way as it is in any other bank. Do you use an ATM card ever with yours?
I don't, but Greg does have the debit card from Wealthfront, which we'll get into in a minute because I don't want to confuse people, but there's like a additional optimization you can do with your Wealthfront account that I recommend.
Yeah.
And we'll save it for the end.
And
but yeah, but you can't, when on all of these accounts, you usually can get an ATM debit card and most of them have no fees on withdrawals. Like they let you use just about, and because they don't have their own, there's no Wolffront ATMs or Wealthfront ATMs. And so I can just like go to the one in front of Publix and I can get money out for free.
Right. And if you need to access your money, so again, usually you get an ATM card that you can go withdraw cash, or you can transfer your money at any time. Sometimes it might take 1 to 3 business days. Wealthfront, I think they have a same day transfer often, depending on how large the transfer is. Didn't you look this up the last time we talked about this?
I don't remember.
You were like, oh yeah, so it'll be there today. I did it the other day. I was transferring money and it was there within 24 hours. So
yeah, it depends on like the amount and where it's going and which institution and all that. But there's rare situations where you can't wait 1 to 3 days for your money.
Right. I've done a lot of thinking about emergencies, both because it really combines my passion for personal finance with my ongoing millennial anxiety. And so all I do is think about emergency situations.
So you just play through the scenario.
Exactly. And I just can't really I don't think I've ever come up with one aside from something like apocalyptic where I would actually need to access that much cash, like in a bag with a dollar sign on it. Usually you can put down a credit card and then pay it back like in a day, or, if you've got a house emergency or a medical emergency or a car emergency.
Yeah. And put a pin in that, put it on a credit card and pay it back, because I'm going to get to a really great solution for that in a minute.
And I think the other thing, if we just had to recap why we love HYSAs so much, is that they usually also don't have any monthly fees.
Yeah. No fees.
Yep. We love high yield savings accounts.
Yeah, I'm a big fan. And it's literally as like easy as just going and opening an account, right? Like click on the link, put in a little bit of information, your name, your social, your birth date. Like I think I said it takes 5 minutes. It literally takes like 2 minutes. And it's a great place to leave your emergency fund sitting. And I'd say some other things sitting in it also, which we'll talk about in a minute.
When did you become a high yield savings account convert?
I mean, I had an Amex high yield savings account for a long time. I think I've had one for a pretty long time, but back to when they were like, you were getting like 2%, not even that much. What about you?
I might be dating myself here, but I literally remember, it's funny because you mentioned Bank of America a couple times. Bank of America actually used to have, nope, I'm wrong. PayPal. I used to have my money in a like money market account with PayPal in like 2006. And it was paying 4+% back in the day. I was thinking Bank of America used to have that thing where you would swipe your debit card and it would round up. So if you paid something like $1.75, then it would put 25 cents in your savings account and they would match it. And that was amazing. But I just remembered I had that at the same time. I got into this stuff pretty young. Like I was a new adult. And I was like, wait, did you know you just let your money sit in your money market account and get 4% on it? But then interest rates dropped, so that wasn't a thing for a long time.
Yeah, that's so interesting. I was trying to like go find a chart of historical savings rates. Because, yeah, they've been kind of all over the place in the last
I looked up earlier. I didn't find one of savings rates, but if you search for like what the federal interest rate is, it's pretty easy to find a chart of like what it's been. Because it dropped in...
Yeah, I'm looking at one now. That's got the federal fund rate, and then it's got average savings rates. But in 2006, it was like, it was really high. It was like 5%, but it still says that savings rates were at like 0.5%.
Like I said, I feel like I had found a hack. Like I was like, oh, if you just leave money, I'm almost sure it was PayPal, but maybe it wasn't. But
it might have been. Yeah.
I think it was PayPal in this money market account. And the only reason I know this, I think I've told this story before, but I accidentally got like overpaid by my college loan, living expenses, financial package situation. And so they accidentally sent me an extra couple $1,000. And I knew I owed it. And I was just like waiting for the system to realize that I owed it and that I need to pay it back. And so I put it in this money market account and I was making 4% on it. And I was feeling so funny. Smart and savvy.
Yeah, it's impressive.
Yeah.
Okay, so I think there are some ways that you can level up what Wealthfront offers and kind of like a little bit like hack the system a little bit. It's not hack it because this is like how it works, but just a few things that you should know about how Wealthfront works. And I unfortunately, we can't speak in detail to some of the others, but just think about this concept. And this is one of the reasons why I in particular love Wealthfront so much. So they now offer checking features on their savings accounts, but only their individual savings accounts. So when you open a Wealthfront account, you either can open an individual account or a joint account. Now you can actually open both by the way. So don't feel like just because if you're like, oh, well, all of our accounts are joint, I need them to be joint. If you want the checking features, open an individual account. That's what I would recommend. So like as an example, Greg and I both have individual accounts, and we now also recently have a joint account, which we use to be able to transfer money to each other more easily. And so think of it as you now have a savings account with checking features. Or if you want, you can say, I now have got a checking account that's got a high yield rate on it.
And when you say checking features, what do you mean by that?
Okay. You can get an ATM debit card against that account. So let's say you keep, so a lot of people, like back to the like coaching client example, I talk to a lot of clients where they like to keep large sums of money in their checking account because they auto pay their credit card bill every month, and they just don't want to have to like watch when bills come out, and they have enough money to cover everything. And I feel the same way, but I don't want to keep that money in my Bank of America account because I make like literally next to nothing on it, 0.02%. And I want to be getting 5.5% for as long and often as I can. And so those checking account features are, I've got a routing number, and so it acts like a checking account. And so when I sign in, when I like auto pay my Amex or my Chase cards or whatever it is, I connect them to my Wealthfront savings account, and they are auto paid out of my Wealthfront savings account. So I still keep a traditional bank. Like I still have a Bank of America account. It literally has like $1,500 in it on any given day. It's truly like an emergency if I need to go get some like cash somewhere in 4 minutes, or I need to, go get I've had to go get like a money order for something at like my kid's school, or, just something where I need a local bank. But I keep 99% of my money in Wealthfront because they now have these checking features. And so I can, when I bought my car, I could do it directly out of this account through a wire transfer, basically using my routing number and my account number. And so it gives you all of the features. You can do online check deposits into the account. So, I mean, it really does act like a checking account. It has the features of a checking account. I think all the ones that really matter. And so the idea is I keep all my money in that account, or again 99% of my money in that account, and I have all my bills auto paid through Wealthfront so that I am always optimizing how much interest I'm getting at any given point.
I do the exact same thing. It is so nice because I feel like before I started using Wealthfront, I was actually using something called rewards checking, which was still paying 2% when all the savings, even the high yield savings accounts, were paying less than 1%. But before that, I was like, I have, just using made up numbers because I'm a hard numbers example person, like, I have $20,000 in savings. That's in my savings account. And then my checking account has like $3,000 in it, right? Because that's what I'm going to use to like pay my rent and do whatever I need to do. And then I would just transfer money from my savings account when I needed it, or transfer out, because I needed those checking features that you just talked about in my checking account. But the high yield interest would only apply to the savings account. So you kind of had to keep them separate. But I'm with you. I just keep everything in like one big account. And that way, exactly, like my mortgage comes out automatically, my credit card just gets paid automatically. And I don't really have to think like, do I need to transfer? I'm not trying to balance the optimization of having enough money in my checking account versus putting as much into my savings so I can get the interest.
Yeah, and you're not like separating your emergency fund from your day-to-day money. You've kind of, again, this is a know yourself and know if you're disciplined enough that they can all be sitting in the same place. On that point though, you can do what's called like parent-child accounts. So in my main account, I don't know what the limit is, but you can create all of these little sort of sub-accounts and name them. You can give them whatever name you want. One of them is my kid's name. Greg's got 2 of our kids in his account. And so their savings accounts we keep in Wealthfront, and you could create an account that says emergency fund. You could create a sub account, and they're just line items within your main account. But you could have one that says emergency fund. You could have one that says, Kate's savings account. You could have one that says car fund, something, whatever your savings goals might be. And you can move money in and out of them whenever you want. The one catch is the interest is accrued on the total account, not on those sub accounts or those children accounts. And so like once a year I'll go in. I went in the other day to Kate's account and I did the math, and she had earned $72 in interest in the last 12 months. So I just put $72 from my account into her account. And so you have to kind of manually attribute the interest if you want to give credit. If you want to give interest credit to sub accounts, which the only reason you might want to do that is for like your kids' savings accounts or something like that.
That makes perfect sense. And it's not that, I mean, you have to go in and do the math, but you can use a calculator.
Yeah, true.
I believe in you. I do think, I was just looking it up, want to make sure that we are being very accurate, because when we're not, we get emails.
People point it out. Yeah.
I don't think that you can get a checkbook from Wealthfront.
Oh, that's fair. You might not be able to.
I don't think you can.
Why did I think I saw that you can send a check?
You can
like a
send
digital
a check. I know.
I mean,
I
where
always
they
get excited because I'm like, yeah, send me some checks because sometimes I need checks. Actually, the only time I use checks is I pay the people who clean our house with a check. And so that's another reason I keep a local bank account because I literally have exactly what we pay them direct deposited into my checking account that's local here. So I can write them a check every month for that. In Wealthfront, you can send a check, meaning it's kind of like bill pay. Like I could go into wealthfront.com and say, send Maggie Tucker a check, make it out to Maggie Tucker, pay her $50. Here's her address. And then it would mail you a check.
Yeah, exactly. And you're right. I just double checked too. You're right. You cannot order a physical check book or set of paper checks,
which is too bad because
but again,
I bet they would
I don't know, when was the last time you like
I think they would offer very whimsical checks though, I bet.
Oh yeah,
with like dogs and lollipops.
I was just thinking like lollipops and paw prints, you know.
You don't have to write checks often. The people who clean our house, they don't want to take Venmo or anything. They want to check.
Yeah.
I guess we could pay them back.
Which again is why, as much as I am a huge fan of Wealthfront, I have a Bank of America account that I keep a small amount of money in and I can move more money into whenever I need to. And our like business checking account is at Bank of America. And I have physical checks for that. So when I need to write somebody a physical check, I just had to for something at the kids' school. They like really required a check. I wrote it out of my Bank of America account.
Yeah.
Right. And so you can, my thing on a lot of this is, you know, I think people are often kind of looking for like, they like to point to excuses for why they don't want to do something.
Mm-hmm.
And they're like, well, I would do it, but this one edge case scenario that happens once a year is why I'm going to give up earning 5.5%. Or the fact that there's a little bit of a hurdle of like, you got to go create another account. And yes, it's one more account to keep up with. But in my opinion, the amount of money I earn off of Wealthfront is for me, it's significant because I keep a lot in cash because I am retired and I have a, you know, larger than average emergency fund, I would say. And I earn like a meaningful amount of interest from Wealthfront and it's pretty nice.
Yeah. Yeah. And I do think there's a lot of, what's the word I'm looking for here? When you want to do something and you're like, yeah, that's on my list of 1,000 other things I need to do. And I just don't have it's not motivation. It's like the velocity to go do it. You could just open the account. First of all, you could just open the account, right? Like that's step one. You can figure out the rest later. You could also, if you're a person who still has a job and you're not early retired like Maggie, and you have a job that pays you every 2 weeks like me, you could go into your HR payroll system and just say, okay, I've got this new account. Most systems will let you divide up your deposit. So maybe you're like, okay, I'm going to put $100 out of every paycheck into this new account. And then you're like, okay, that's step 2. And then maybe later you take the step to look at, okay, what's everything that's automatically coming out of my account I'm using now? Okay, let me start updating it to the new account, make sure I have enough money over there. Like it doesn't have to be sit down, do every single step all at once.
Yeah. And it wasn't for me. I mean, I kind of slowly moved everything over as soon as Wealthfront started offering checking features a while back.
Yeah.
Okay. Well, I think we've hit the big points. Anything we haven't?
I think we have sufficiently shared our
love of Wealthfront.
Our love of Wealthfront. Wealthfront, we love you. If you wanted to, I know you never want to have sponsors on the podcast, Maggie, but if Wealthfront offered, I feel like we would have to say yes.
I just want to say, if you did want to sponsor us, we would say your name right and we'd quit calling you Wealthfront. Like promise. For sure. Like that would be in like the terms and conditions. Like we'd get our shit together. We'd pronounce it right. We wouldn't make fun of your name. We wouldn't pretend to like make digital lollipops and tell people to like lick the app or anything like that.
Maybe we would
be on the like, up and up.
Hey, it's fine. You can also just open one with like Amex or Capital. We would like we'd be like, no, Wealthfront or nothing.
Well, honestly, I feel so strongly about Wealthfront. They're not a sponsor, but like even when you mention, you're like, well, if you're with Amex, you should just stay. I'm like, no, you should, for the extra percentage point, you should move to Wealthfront.
I saw
like,
you made a face. You were like,
I know. I was like, wrong. No, leaving money on the table, not cool.
I will say the only I have talked about Wealthfront a lot. The only person I feel like who has told me sort of a very like, ooh, yeah, this is why I don't want to use them for my main checking account is someone who is part of a couple and only one partner earns income. So like so to use a checking account, it has to be an individual account. It would need to be in the income earner's name. And so that person's like, well, what if I just end up with like no claim to this money because my name's not on it? And do you see what I mean?
Yeah, I do. But that person should understand the laws of their state, because many times it doesn't matter whose name something's in if you're married.
Yeah.
Now, if you're not married, it's different. But yeah, again, that is
it's an edge case to your point of like,
Yeah,
it's
it's an
probably
edge
never going to
case
be an
and-
issue. But I was like, oh, I get it. Because
Yeah.
what we do, the two of us do, we have 2 individual accounts. So we each have one in each of our names. And sort of unofficially in my mind, one of them is like the quote unquote savings account where I just like leave a bunch of money. And then the other one is like the what we live out of checking account, just because that makes sense in my head.
Yes.
But
we now have 3 accounts as of yesterday, which, because I actually called Wealthfront and I was like, hey, we just sold a rental house. We're trying to move a large sum of money. And like, they were like, oh, you should just open a joint account in addition to your individual accounts. And then you can tie it to both of you. And then, because every bank has like some really weird daily limits on how much you can transfer, which I've run into every now and then when we're trying to move money around. And anyways, they were super helpful. And that was like a pretty creative solution I wouldn't have necessarily come up with on my own. And it took 2 seconds to open that.
so I guess, I don't know. Can you think of even one more thing that you could say about why you love high yield savings accounts so much? I might be out.
No, I think we've hit it. I mean, they're you know what it is? That there's no downside. I cannot think of one downside. Don't even try. I see your mind working.
I think if you keep another local account, there is no downside.
Yeah, you're right. Sorry, we covered some of the downsides, but keeping a local account with a little bit of money in it fixes them all. And you kind of,
Yeah.
nothing amazing is perfect. So it's like
Right.
almost perfect. And you keep a little side slush fund for the few moments, those edge cases in your life, and you'll be okay.
Because what came to mind as the downside is I thought about my dad walking into his local bank and being like, hey, Peggy, and doing whatever little bit of banking he needed to do and just, being happy to like get out of the house and have a task and say hi to someone. And that's the only thing Wealthfront doesn't give you. So you'll just have to like make
Well,
friends.
you say that, but I called Wealthfront the other day about this issue I was having, and they were incredibly helpful. Her name was not Peggy, but they were super helpful, and I didn't get a lollipop.
Yeah, you can solve for that too. You could just like go to a local coffee shop a lot and get to know them, or ice cream or something else instead of a bank.
Yeah, true.
Yeah.
True.
Solved it.
Okay, well, we did.
You
I hope
did.
this was...
Wait, oh my gosh. Why did this take me so long to make the connection? Whoa, look at those abs, Maggie. You leaned back and I was like, dang. You could use the interest that you earn if you put $10,000 in. You could use your $500 a year and just become a regular at a coffee shop or an ice cream shop or somewhere else. And that would be even better.
Yeah.
Yeah.
Mm-hmm. What she said.
Okay.
Okay.
Less excited about that, but that's
No, I mean, I just was... Yeah. But I mean, you're saying spend all the money you made.
okay. Spend half the money you made.
Look, I'm going to spend it on something anyways, but spend it on something intentionally.
Yeah.
Right? We got lots of other podcasts on that.
Anyways,
Okay, we'll wrap this up because, we could be here forever.
literally.
Literally.
If there was like okay, do you remember a long time ago? I feel like it was a common trope on TV shows to be like, oh, it's a dance-a-thon. We're raising money. You have to dance all night, or you have to like be on the seesaw all night, or you have
It's like
to
a telethon or
exactly. Like if there was a
or like race around a track all night. Yeah.
We could do it. I think we could literally talk for 24 hours without running out of things.
I could. My eyes got like big and crazy. I was like, I could totally do it. Get me a Coke Icy. I'll be there. Oh, we should have a podcast-a-thon.
Oh my
Just like
God.
24 hours of. I remember that. I remember in college doing some race that I then later did with
Like a Ragnar?
Greg when we. No, I did do a Ragnar once, but no, it was one where you race around a track all night. It's like a relay, and it had a name, and it was to fight cancer.
Oh, if we could just chat to solve cancer or some other charitable cause, that would be great.
Yeah.
Anyway.
Like getting everyone to have a high yield savings account.
Yeah, exactly.
Okay, we're going to wrap this up. We really appreciate you guys listening. We know, even though we want to do like a podcast-a-thon and podcast all night long, we know your time is probably limited. We appreciate you spending some of it with us. If you'd have enjoyed this episode, we always love it if you want to leave us a written review on Apple Podcasts, or you can leave us a rating on Spotify. We really appreciate you taking the time to do that.
We really do. Your time probably more valuable than ours based on how we treat our time. But you could also share this episode with a friend or a family member. If you know someone you've been trying to talk them into opening their own Wolfront account, you could send them a link to this episode to encourage ongoing discussions about money. If you're trying to like maybe talk to your partner about opening a high yield savings account, this would be a great episode to share.
Yeah, what she said. That's going to be my new what Liz said.
I'm gonna, oh my gosh, maybe that could be one of my annual goals this year was to get Liz Gets Loaded stickers made. And maybe they could be like, yeah, what Liz said. And that could be the sticker.
That's what she said.
Yeah.
That's what Liz. Yeah, we'll do some play off that. Do you see? I just got some new stickers.
I did. They looked cool.
I'm gonna send you some.
Oh, that's nice.
I just got another one today that says "Stop buying stupid shit and go for a hike instead." And it's got like a pretty mountain range picture.
Wait, this is so great. Okay, so I have these stickers. I have a Friends on Fire sticker on my water bottle that I'm holding up right now.
Vintage.
You, the listener, cannot see it, but Maggie, the person here, can see it. So I have one from Friends on Fire that says spend less, live more. And then I have an Inside Out Money sticker. And I was in a meeting the other day. And at the end of the meeting, someone was like, oh, I noticed the stickers on your water bottle. Are those like, and I thought she was going to say she was a listener. I thought I had been like I was famous and I had found a fan.
Identified, found.
I think she more was like, oh, that's like the FIRE movement, right? And I said, yeah. And she said, oh yeah, I know all about that. Financial independence, retire early. And I was like, yeah, I'm really passionate about personal finance. Everyone I work with, whether they know about the podcast or not, like they know that I will talk their ear off about all kinds of accounts. But then she goes, yeah, that's nice for people who don't have kids. And I was like, oh, but no, you still could. I didn't want to argue, but I was like, it is hard. I mean,
that's a limiting belief. It might be easier for people that don't have kids, but actually that's not even true. It depends how much money you make.
It
right?
really does. And it depends on what your goals are around them. And it depends, like it could be harder with kids if you're trying to fully pay for 4 years at like a private college, right? It's different than if you're, and you want to help them with the down payment on a house and totally. Like a lot of things. But
I got to clarify my own. It doesn't just depend on how much money you make. It depends on how much money you make versus the lifestyle you live and how expensive of a lifestyle you live. And so I think kids are one of many equations. There are many more even controllable, pieces of your financial life that are not whether or not you have kids. But anyways, I agree with you. Like that's not like a quick topic that you just have like a quick rebuttal on and then walk out of there.
Right. I'm like, yes, you can. Bye.
Plenty of people do it with kids. Maggie has. Bye.
I know. I was like, well, maybe you should listen to this podcast. But it was exciting. That was the first time I have these 2 stickers on my water bottle, and it's the first time someone has brought them up. It's like in conversation.
Yeah. Oh, that's cool. That's super cool. Yeah. Okay, I have a child in my house calling me, so I'm gonna go to actually deal with them.
All right.
Okay, we gotta say bye though. Okay, bye, Liz.
Bye, Maggie. Talk to you later.
Or we should say like something before we say bye. Bye. See you later.